Well, team, look what we have today. Of course, wouldn't you know it, Jerome Powell, 10 a.m. Eastern. Of course, that's going to change everything up. We can look all we want at the pre-market action. We'll find out. What does Jerome Powell say? Will we get an updated view on disinflation? The word that was such a focus word a month ago. Did the hot PCE report put Powell on alert? We'll find out today. Will he talk, of course, about the extreme tight labor market? Economic growth needs further slowdown. We'll find out. Of course, he'll have his meeting with the Senate Banking Committee. That starts at 10 a.m. You don't want to miss that. Dick's Sporting Goods sees Rivian with a offering. We'll talk a little bit about Meta. We'll get into Key Corp Bank, of course, and we'll take a look at some action that's going on out there. I know you guys have been seeing Pinterest, Snap moving. That's all on the TikTok ban. We got a lot to talk about, and of course, we got our guest today. We're going to get into the Stock Traders Almanac. Hit the thumbs up, Jeffrey Hirsch. Let's get it started. This is Pre-Market Prep. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. Let's take a look at the S&Ps. Not a big range overnight. Up 5.25 handles at 40, 50, 75. The buck gaining about 25 cents at 104.57. Bonds up 0.75 point almost at 125 and 11, 30 seconds. Crude hanging out in the $80 handle. Down 39 cents, though, at 80.07. Gold slipping again, trying to decide what to do in the 1800 handle, down 10.20, 1844.40. Silver in the red, back under 21, that's down 20 cents. Bitcoin flat this morning, up $40, 22,430. Mr. Powell is going to be joining the investment world at 10 o'clock. Will he be pumping Powell or dumping Powell or peaceful Powell? What do you think, Triple D?
I think he's going to hold back on the disinflation talks. So I think we're not going to hear a lot about that word. It's impossible to really say, if he's going to be dovish or hawkish, and it's more impossible to say what the market's response is going to be. But we have been in this choppy environment for a long time. I think what we're going to equal here today when Powell takes the hill is a choppy trading day. I think don't, get faked out by, oh, here's the big rally. Oh, here's the big sell-off. I got to sell stocks. Oh, here's the big rally. I got to buy stocks. I think you're still playing it the same way the fade trade continues to work.
Yeah, quiet day yesterday. Apple led us to the close to that February 21st high, but Apple kind of peaked. The market pulled back, came into the close. 3-day win streak, which is always good. It just kind of hung on there near the end. Mitch, how are you doing on this Tuesday morning?
Not bad, just hanging in there. And one of the things that I did yesterday is a lot of times, at least from lately, I've been having like a lot of multiple swing positions. Yesterday, I closed down to just 2 because I felt like we were in this in-between stage, right? We need to really focus on what happens today. I think with Jerome Powell, that's going to make a big difference in the market. And so kind of in between until that goes through, that's when we can start seeing maybe some the next move happen. So I felt like traders were on the sideline waiting for Powell yesterday. We didn't get much action, a little bit of a pullback, but if we could hold here towards 405, 401s, still stay up here, we'll find out what Jerome Powell does today to the market. All right, let's take a look. I know that China stocks were dragged lower based on customs data showing exports in January and February period fell from a year lower, imports decreasing at a faster rate than expected and indicating still weak domestic demand. And this came from Reuters. So if you guys are seeing why some China stocks are down, that's definitely affecting them. But we also got some more China news out there. So keep watch. We'll talk a little bit about those coming up, but definitely if you're seeing why some of those are taking a hit, it was some export data there.
Dennis, was that just a bad take here in the FXI? Because I just have just moving up to 29.94.
Yeah, bad tip. So 8 o'clock. A lot of times you see old trades coming through, and I don't even know what that trade is. I see 30.58 and 29.93. That wasn't even on the print yesterday or the day before. So no idea what those Fender trades are. But the current market, which FXI is usually tight at this time, is actually down 5 cents. 29.22 to 29.23. So it is not up 2.24%. Baidu too just ticked at 8 o'clock and it ticked down. Like it's showing down 3%, but it's not. It is down. It's down $2.50 here today. Billy is also down. They're doing an offering here, which is why it's trading down here. But what do you think of the BABA chart? Because we have been consolidation station here for about 5 days. We've come off significantly from those highs, down from 120 at the end of January all the way down to 89 bucks. So you now have a significant pullback here in Alibaba. What do you think about this?
I think you got to, in the way Baba moves, I think you got to, if you're stepping out here at the $90 level, I think you got to get it at $5 here.
You got to give it room.
Yeah, because just the way this moves around. I look at all the support, and you know what it looks like? It looks like your 85 buyers kind of stepped up here. That's where they were buying in mid-December before the rally, and now I think there's like, okay, we're not going to get it at 85, but we're going to build a position at 90. That's what the accumulation there looks like to me. So if you're stepping out at 90, boom, got to lean on. I don't know. Don't go exactly at 85, maybe a little bit below, but I wouldn't want to be shorted down here.
Let's move on.
Let's go to Dick's.
Earnings stocks of the day. Start at Dick's. I love that name, Dick's. Good name.
Didn't name it after you, Dennis?
Actually, my one trader buddy.
Dennis Dick's.
I remember back, and he's always say, "Hey, it's your dad's company."
It's your dad's company. That's what it is. Q4 EPS $2.93 beat the $2.88 estimate. Sales at $3.6 billion beat the $3.45 billion estimate. Q4 inventories up 23% year over year. They did see fiscal year 23 EPS to $12.90 to $13.80 versus an $11.96 estimate. So good outlook there for the EPS. Now that inventory up higher, I don't think that's good news. I think that's negative.
Yeah, but the one thing about this stock is it just seems like it's always up near the highs. And maybe it was COVID that really turned this whole thing around. And obviously since 2020, we've been going straight up, but people like to do stuff. I mean, the outdoor store, this one just always seems to do really well. And here you are right near all-time highs, really. The all-time high, 147.
All-time highs, Dennis. You are all-time highs. The all-time high, you look on your bottom right chart, you take to 142.78 in November of 21.
I got 147 on mine.
You got 147.39.
Yeah, I do too. But maybe there was an adjustment in there.
That same month, the September 21st.
Yeah, I do too. I have 147.
In November?
Somebody's got conflict here.
No, September.
Yeah. No,
September
not
21.
November. Go further out, Joel. Go back to 2021. Go to September of 2021. We hit 147. Go a little bit further.
Yep. And then also on the 8th, on that August, we went to 144.74.
That's what I have as well.
What about
Again, sometimes and my software. So my software never adjusted my General Electric. Like, bring up your General Electric chart, because my software never adjusted the GE price. Where yours did. Yeah, yours did, because we had the big spinoff, obviously. Mine never adjusted it. So sometimes when you have it, I don't know if Dick's did anything like that. I don't think they did. But sometimes you do see conflicts, and and obviously the price is the price. But there's usually, when yours did it, like if you look at yours, and I'm just looking at your GE chart, you see it way up there and running from October, where I see it coming all the way back down because they didn't adjust for the spinoff on mine, the GEHC, which was obviously a $17 spinoff there. So sometimes these things don't adjust for it, but I don't know why, your Dick's is short.
Where everyone in the chat is going back and forth too. Florida is agreeing with me. Edson is agreeing with you guys.
I wonder if there was a special divvy or something.
I think there was.
Somebody adjusted. Some of these charting services adjusted, and some of them didn't.
So again,
that's up to the individual chart
special dividend
data provider.
Yeah.
Well, Dick's has definitely been a really strong one, but also their competitor really strong too. That's ASO, right? Academy Sports. That one continues some really good chart. I mean,
It
man, this
has.
this is a monster one, man, and it's continued. It has about 30% short float. We talked about this with Michael Noss on Start Swing Trading. He likes to look because I mean, how can people be 30-something% short on a stock that keeps making new highs,
On
all-time
ASO,
highs?
30%?
Yeah, it's kind of an interesting stock for it to be highly shorted at
Yeah.
that price.
I don't follow the company. I've traded it every once in a while, but I don't follow it closely enough to know anything. But I will tell you, like you said, holy, you look at that chart, Joel, at ASO, there's a little, tightening up, getting ready to do something. If you look up at that weekly chart I'm looking at there.
Yeah, I got the monthly on the bottom right, but I mean, what a time to IPO a sporting goods store during the the pandemic in
Yeah.
20. I mean, you
Yeah.
talk about absolute perfect timing. The other one that fits into this, Hibbert Sports, HIBB.
Yeah.
That was this is kind of interesting too because yeah, you're right at the 50% on this one. You went from 100 to 40, pulled back to 40. You're hanging it to 70. Yeah, if this thing can establish a strong, 70 bid here, wow. Not well, last month's high was 73.74, but surely doesn't look like the Diggs or the ASO charts.
It definitely doesn't. And please don't call me Shirley. Had to throw it out there. Okay, let's go on to the other big one that's moving here this morning, which is SE. And this stock obviously had a really rough 2021 and not so great of a not 2021, really rough 2022, coming from the darling of $366. And I believe in 2020, didn't I say this was, or 2021, I believe this was my top trading stock. I traded this thing all the time and it just kept going higher. Now in 2022 was the exact opposite story. Kept going lower. We've kind of consolidated down here, and we've had a nice period, long period of consolidation. 45 to 72. We've had a run, but when you look really where we came from, perhaps there's more upside here, and today we're seeing that.
Yeah, you did get a quick spike over 75. So what you want to see in the regular session is buyers take it up to 75.14 and beyond. 75 is just a very interesting area because you peaked there in early February. Also, when this thing was coming down hard in last August, it just found a vacuum, a lower day. Really had a bad couple days going back. This is back in mid-August of last year. In two sessions, it went from 89.97 to 72.49, and that last session 75. So be looking for that as a potential target. SE already traded there in the pre-market trading.
The other one I often do trade with this is MELI, but it's really been blasting off here too in the last, really January. I mean, a lot of these stocks turned it around in January. Again, these are prolonged January effects here, where they were in the gutter. We got the calendar.
I have a question. Why those two together? It seems like they're completely different stocks.
Well, not so much. They're in different countries. So if we go look,
they do different things though, don't they?
Pardon me?
Don't they do different things? Isn't SE more into gaming and Melly is more like e-commerce?
Yeah, but it's got e-commerce business too, C Limited. So if we look C Limited, they got the gaming.
I'm just asking so I can understand the relationship, right?
They're in Singapore. So SE is in Singapore. And again, it's sometimes loose relationships too. You have Coke Pepsi, which is an obvious one. And then I get these exotic ones that I just see move together. And maybe it's just so much that, my systems have identified that these things correlate pretty well together. And they have really, if you look overall, I guess it's just, value, it's the high value, the high growth stuff, the ridiculous moves. But yeah, so SE and MELI, like SE has, an online commerce business as well. And then MELI, if you're going to Mercado Libre, is where are they located? Different country. They are in Argentina. But again, they are online as well. So they both have e-commerce businesses, which is why, and they're both not American. So that's why I kind of just trade them, not always together, but I keep an eye. MELI is a hard stock to trade too because it's a $1,200 stock.
Yeah, $1,200.
So those are harder because you got to, basically 50-cent spread on the thing all the way, all the time. But there is both e-commerce business and they're not US, so they loosely trade together.
All right, let's keep going. Let's get just to mention on that C, the reason why it was a nice big beat, right, was that EPS, right? The EPS came in at 72 cents. The estimate was a loss of 79 cents. So I don't know what happened there. There had to be something special, but I'm going to take a deeper look. Of course, definitely a big beat on that EPS.
I'd be scared to fade it. I mean,
Yeah,
I've been, of the fader, but this one's just so beat up from where it was, 350 all the way down 49, 45. Now we're back up at 72. I mean, this thing could go to 90 and it's still in a significant downtrend here. So it's tough to just come in here and say, oh, it's up 10%. It's too much. Well, is it? Because it really got murdered last year. So
it looks to me similar like that Sienna yesterday that just was a big pop and then just came all the way back down. So
that was a completely different stock, though.
I'm just saying the chart.
Stock,
I'm talking about the
PE.
chart, the move, just the technical move. It looks very similar.
Yeah. So again, and obviously technical is one tool in your toolbox. That's why I try to group them. I put Sienna in a value category. I put SE in a growth category. So those two stocks are completely different. So I wouldn't trade them together. I wouldn't take anything, because what we have seen in 2021 is when value stocks are rallying, there's a more tendency to sell those rips. And we've seen with growth stocks, it's a little bit different. We know growth has outperformed in 2021. We're only, 8-9 weeks into the year, but so far it's been a growthy type of year. Yes, it was a rough February, but overall growth is still outperforming. So I think it's just about the grouping of them. And I put Sienna more in a value category as opposed to a growth category.
All right, let's get to another stock. Let's go to Rivian now. Let's keep it moving here, team. Let's go, as Rivian is trading lower after the company announced a $1.3 billion convertible note offering. And they might need it, right? They need to stick around. I think this is the survival area. This is the time when EVs need to really kind of hang tight, hold their money, because right now is not the big EV boom. Yeah. I'm not seeing everybody just talking about how they've just bought their new Tesla. I don't think that's going to happen right now. I think that's a couple years down the line. So they might need some money. So they got to hang in there.
Took it right down. I think right now area of potential support is under $16. You had a real patient buyer here between 15.75 and 16. This was after the news came out in the after hours. If you're looking for more upside, I think you got to get above 16.20, trading down a buck. Low of the move is in the lower 15 handle. But if it's 16 was the area of some highs, and I don't know. I mean, I don't think you're going to get to see the low of the move on this one. 15.08 was your low last Thursday.
I think you'll find buyers in those 15s. If you get down to that area, I think you will find buyers, people bottom fishing, people saying, oh, well, the market's coming back now. I do think, again, on offerings, they typically don't buy them as much, but in this case, maybe. So, and Lucid has come way down here too. Lucid's starting to try to put in a bottom around 8. So some of these growthy stocks that have been really beat up here in February, obviously they had ridiculous rallies in January, and then a lot of them gave most of it back in February. Some of these are starting to find consolidation. And I know Carter Worth on CNBC was pointing out last night on Fast Money, just looking at Square, he was looking at SoFi, he was looking at a lot of these that actually have stopped going down temporarily. So you had the big move up, you've had the big move back to check back a lot of these to the 50%. Now you're starting to consolidate here. So you wonder if you don't have some more upside in a few of these Kathy-like growth names. Even looking at ARKK, same story. The big run in January from 30 to 45, which was obviously overdone, when you're going up 50% in 1 month. But then the check back. So check to $37 is like a 50% retracement. So from a technical basis here, an ARKK, the reason I go to that is because basically all these stocks that she holds are ones that are cash burning zombie companies too. Some of them are okay, but they're all kind of the same thing, high P's or no P's because they don't make money, huge growth. And I think Rivian falls into that category too, although the chart on this looks nothing like the other ones. It's right back down at the lows. So 15, huge support. It is a problem because these companies obviously are not going to be making money for a while. It's another reason that I don't buy Fisker. I've talked about wanting to rebuy my Fisker, but I'm very scared that they're going to do another offering. I think they need to keep their production going. And you see when these things do the offerings, they get hammered on it. So I'm scared Fisker's got another one in the carts too, because they've hinted that they may have to raise more cash there as well. So I don't mind the Rivian though around the $15 area.
Yeah, you've already seen the buyers step up here. It
May not get a chance down there.
Under 16, between 15.75 and 16.
I know I'll be looking for maybe an investment in Rivian, but I'm going to be
We're
looking
gonna
at probably
invest in
half
Rivians.
of this.
Start
Half of
ta-
this. Half
So
of this. It
talk
needs
to
to
me
go down
why
to like
investing
7.
in Rivian, because I wouldn't invest in Rivian, but give me your
As simple
thesis
as
here.
this, it has connections, years of experience with Amazon, right? I'm pretty sure Amazon has given them some pretty decent feedback on their vehicles.
Did Amazon puke theirs out though? Did they have
I
a
don't
big,
know.
or
Did
was
they
that
get rid of this
Ford?
one?
No, they didn't puke it out.
I'm not sure.
And at the end of the day, I don't know if you've seen the truck ever.
Ford puked their out.
Have you seen Rivian's truck, like literally like in person? Once you see
No.
that in person,
Pretty cool.
I can tell you right now, I would drive that truck. And I don't like EVs at all. I'll tell you right now, I'm way more into the gas guzzler life. But that truck looks to me like a Chevy Silverado, like an F-150. I think it's the closest thing to looking like the trucks that we're used to, not like a Mars truck like you see in the Cybertruck, right?
I don't
mean,
like the Tesla truck.
Hey.
So, and you
Yeah,
think
that's
this-
why. That's
Bring
why.
it, can you
I would say
bring us a picture of it? What's the Rivian
Yeah,
truck
I
look
can
like? 'Cause
look
I
it
can't
up.
even envision it here right now.
Rivian truck here. I got you guys.
I'm not saying your investment thesis is wrong. I'm just curious.
Yeah, why not, right? Let's take a
Yeah,
look. real
exactly.
quickly. I got you right now. 2 seconds.
I mean, some of these EV companies are going to be around. Not all of them are going to zero. So, I mean, there's just too many of them. So some of them are going to go to zero. So if you can pick the ones that are actually going to survive, some of these could actually have upside. Again, $16 billion market cap. I know some people are saying it's got some cash, but they're burning cash pretty quickly. Oh yeah, it does look pretty cool. Is it
This
just
is
the
the
one
truck.
truck they have?
Yeah, well, they have multiple like different versions of it, but yeah, this is the truck. And I mean, when I've seen it and I've seen it in real life, this looks like
It
a
looks pretty
Silverado,
cool.
man.
It looks
like
way better than the Tesla Cybertruck.
Oh,
That's
the
the,
Cybertruck.
that's the center. That's the
Way
center
better.
console. I mean, it looks like a truck.
What's this
You
truck
get what I
cost?
mean?
Do you know?
Now that I don't know off the top of my head.
Let's
I think
go
it's in the
look.
60s or the
Let's Google
70s.
this. Yeah.
If I had to just like roughly
Rivian
estimate it.
cost.
Has 835 horsepower, all-wheel drive. Now the EV range is where it gets a little bit
73,000.
small. Only 314. So this is where I've seen a lot of these trucks struggle. We've talked about it with the Lightning, Dennis, where like it starts to tow and then loses all its freaking EV range.
Is that
So
this doesn't?
I think they're all going to have that issue.
That's
I'll
a
be like that.
problem. That
They're
is
all
a
gonna have that
huge
issue,
They've
I
got to
think.
solve that issue with the
Yeah,
electric.
it's
because
not just one that's
Yeah.
going to have that issue.
that's
I
the
think.
one thing that would keep me probably away from the Lightning. Not even the.
I like
sticker.
the headlights. You don't like those headlights?
I think it looks
You know,
okay.
I like those headlights.
What are they
kind of a little
driving in
weird.
Texas? If you're not driving a white Ford F-150
That
in
thing.
Texas, you got then you're not driving a truck. So that's what I remember from my trips down to
I think
Texas.
that looks pretty cool.
I mean, these one car. I mean, this is what they have. Different versions of this. This is what they have. This is
Well, they have their last mile delivery truck, right? That's
Yeah.
really their game.
Man,
And I'll tell you right now, last mile delivery, you guys can say that's not going to be a thing. It's going to be a thing. Let's just be honest, because the amount of gas like and like emissions that these companies give off, Amazon, FedEx, UPS, they have to change. Let's just be honest. They have to change. It's not even an option. In a matter of time, they will all have to be running on probably like EVs to deliver these packages. All right, let's
Figure out
get
that
back to
towing
some
capacity,
stocks.
and I'd be more interested.
Yeah,
the first
that's gonna be
EV company that
important.
figures out the towing capacity, the one that's making trucks. First one that figures out, how not to kill the battery when you're towing a boat or you're towing a trailer. That's the one I want to invest in. So let's figure it out.
I did see in the chat some people call that ugly. I personally have seen
I think it looks pretty
don't
cool.
think
I think it looks
ugly
way
at
better
all.
than the Tesla truck.
Yeah,
I'll give
way
it way
better
better
than the
than the
Cybertruck.
Tesla truck. And
Yeah, I would
73,000.
definitely jump
Mitch.
into this.
The one
I
issue
feel like
you're
I'm
going to
in
have to
Mars.
those $73,000. So again, the upper class is going to have no problem with this. It's the middle class. The middle class is going to struggle to get up to there. 2 years ago, when we had the printing presses going, the middle class could pay up and buy a $73,000 truck. Now it's going to be tougher. So I don't know.
We'll
and
see.
again, stocks near the lows. I like it. I like the support at 15, but I don't know if I'm necessarily just coming in today and buying the dip.
All right, let's go to Key Corp now as they're sliding in this pre-market, and especially after hours last night as they put out kind of revised full year 23 guidance for net interest income and popular profit metrics amongst the leaders. The company now expects fiscal year net interest income to rise by 1% to 4%, assuming on beta here, mid high 30s. Looks like the previous view was 6 to 9%. So a big decline from that, right? 6 to 9, now 1 to 4%. This was a slide presentation from the 23 RBC Capital Markets Financial Institution Conference. So maybe look at that conference, see if there's anything else coming out of that, but definitely lower guidance here. They also looked at the net interest income to be at 1.23 billion to 1.2 billion in Q3 and 1.04 billion a year before. This came from Seeking Alpha. I don't trade banks too often, so I don't know. What do you guys think about this?
You don't usually see banks lowering guidance, so it's
Yeah.
interesting.
I don't think I ever remember a bank.
Yeah, well, they do, but it's not that common here. Banks' earnings are a little more consistent usually, but I mean, maybe they're anticipating a little bit of tougher times. I know in loan loss provisions that the banks in Canada has been going up here because they're worried about potential interest rates doing some damage here. Although they're solving that problem with the moving out the amortizations like we talked about yesterday.
You're scaring me in the chat over here. 30-year car loans.
I know. So you said 30-year car loan. I said that sounds like that's coming. That'll be the next thing.
Lord.
Yo, no problem. You want to buy that Rivian truck? We'll just do your AM out to 30 years. You'll have no trouble making that payment.
Oh my God, man.
So KeyBank is off the lows. It really got hit. I don't know who's hitting this down to lower 17s last night. These are conservative stocks that don't move around that much. And it isn't like a ridiculously lower guide. It's a lower guide, but it's not like ridiculous. So it got down to, I think, 1720. It's off the low, 1760.
Yeah.
I think on that low, 1761 from February March, just from 2 days ago, March the 2nd.
Right there. Yep. I got 1761 and then another low in that area at 1763. You're sitting right there. But there's not much under that. And I don't think they're going to whoop it that bad. But I'll just call this 1750 area pretty important. If not, you see the double bottom. That's way down in the 16 handle. But weird rising interest rate environment, and they're cutting guidance. Did they like go into like that? It just doesn't make any sense to me.
Oh, it can. I mean, it depends on if they think that there could be a number of reasons why banks, and again, in a rising interest rate environment, sometimes these regionals are locked up. They've got in the U.S.
rates.
They've got them locked up 30-year, and the lower rates are going up on them. They don't always benefit. And it depends on your loan book. It depends on a number of things. But there's also the fact that you could have, and I know in Canada, I was talking to my buddy who works at Royal Bank. And he was talking about, them raising up their loan loss provisions here because they're anticipating that some people could be defaulting on some of their debt because of the rising interest rates. So this is, still going to be an issue for some people. And, obviously I've talked about the amortization issue. That solves the problem for, some people. But in other cases here, maybe they still can't make those payments. Maybe somebody, and there's job losses coming out there. There is some issues here for the banks. And this is why a lot of them look cheap right now, but if you got into a really ugly situation where we go into a hard recession, the banks could struggle through that. So the banks don't want a recession, but the banks usually like a little bit higher interest rates.
One stock that I'll just call out in the banks that I've been watching, just holding the range that I'm keeping a close eye, is Goldman Sachs. It keeps coming back to the kind of 370 area, then right back down to the 340s, right back up, right back down, right back up, right back down. Wow. You talk about the chop trading, Dennis?
Yeah.
That chart shows it more than anything.
My goodness, that 340 level, Mitch. Awesome call out on that. Look at the lows in December. Look at January and right back to the tick to 340 there as well. Great range to trade, 340 to 370. Good observation. And if we're entering this choppy environment, if we're entering a prolonged period where I believe we go sideways, I mean, you got your bulls and you got your bears, and I'm the sideways. I'm the only one out there, I think, publicly making the call that we could be in the same spot 6 months from now that we are today. And I actually started playing my longer term portfolio this way too. And I don't often write covered calls. I started writing covered calls on a number of my positions yesterday because I'm like, you know what? If I'm calling sideways market, the best way to play a sideways market is to sell premium. So I sold calls on my forward position, and they're decent premium right now here too. I sold calls on my Intel position. I'm looking at a few other ones too. So the Intel one was surprisingly pretty solid premium there. I think I went out to June and on the 26th, so just at the money, I got $2 for the 26s. So, I mean, and Ford is great premium. I just went next month and I got, I think, 70 cents for the 13s. So there's good premium out there if you think we're going to continue sideways. Obviously, if we continue higher, I get called away on those stocks. If we continue lower, well, I'm buffered a little bit, but not a ton. But I don't think we're going into a market crash situation. I don't think we're taking off. So I think covered call writing in this environment isn't a bad idea.
All right, let's go to let's sneak one more in here. Let's get to Meta. Meta's definitely important. Bloomberg report out that announcing the company is planning another round of layoffs as soon as this week. They're also talking about Chat GPT model sharing AI tools despite leak rumors. They said that they say that they will not stop releasing artificial intelligence tools to researchers, even though that there's claims on online message board that it's a large language model was leaked. So it pretty much out there. There's some rumors that Meta's AI was kind of leaked to where other people had access to it.
The sentiment has just turned for the stock. And, we know in November when it got down there and everybody's like, this is it. I mean, that was the same thing with Tesla. It just got so ugly that, it basically just bottomed out from just sentiment. Everybody who wanted to sell sold. And we've turned it around. I mean, you have two huge levels. 197 when you get up there is huge. It's $8 away from here. That's going to be really tough resistance at 197 to 200. But you can't argue with the chart here, Joel.
Yeah, boy, it keeps head faking, like getting into that gap area. You're thinking, we're gonna leak, and then someone steps up big time at the 170 area. Boom, some rumors about TikTok going bye and job cuts and whatnot.
I was gonna bring that up.
Yeah, I'll just say, you're getting a nice pop off it. You're still looking in the area of yesterday's high, 189.66. I think you just got over. That's the high from yesterday regular session, and then there's just another high, right at 190.83. So I don't know. I'd be cautious. See what happens. 190, 191. Of course, you have the double top at just at 197 area, but it's up. It's opening into just a little bit of resistance. See if you can get a strong 190 bid here in Meta. Well, we see the support all those days at 170 and a little bit of a market rally, and here we are back near the highs of the move.
I think it's really interesting what's been going on in Pinterest and Snapchat, just to mention those. I think Meta's also getting the run from the TikTok ban.
Yeah, for sure.
Just keep that watch. Pinterest was the first one to move on Friday. I talked about that on Friday. I was like, man, will Snap just get moving with Pinterest? And boy, that it did get started yesterday.
Yes.
You saw Snap just started to rip.
A big day. Yep.
I mean, as this gets more talk, this TikTok ban, it is good for these three companies, and especially Snap, which is so beat up and looking for a lifeline here. This would be a huge lifeline for the stock. So not surprising that eventually it starts to take off. Again, we're getting opportunities here, Joel, and there's the four technical things that we like and I like. I like support, resistance, trends, and the 50% retracement. And look at the Snap move from $8 at the end of December, the middle of December, up to basically 12, which is rounded as 12.44. But I'm going 8 to 12, and then where do we check back to? 9.90, which should be about the 50% retracement. We consolidate there for 4 or 5 days, and now we start to blast off. So again, same story. You get these consolidations with the 50% retracements of the original moves. Sometimes they start to take off here again. So keep that in mind when you're trading these things. Snap's gone a little bit too far, but there could be some more opportunities. And Chad, if you see an opportunity that we just set up there for us, let us know here right now, because I'm liking the 50% retracement on some of these growth stocks.
The monthly on this looks kind of sleepy, but you can see that it's been like that for the last several months. But getting over that $12 area, 12.40, I see a bunch of highs just under 12. Got a little bit carried away in February with the market when you went to 12.44. This month's high is 12.18. So it's been a big move in 3 days off 10. But man, if this thing could ever establish a strong 12 bid, I mean, that'd be a nice breakout on the monthlies for Snap. And then Pins has been in a trading range too, kind of getting near the upper end of the trading range here. I'd like for this one, if it could rally another $1.10, $1.20, you will be running into a pair of highs at 28, surrounding the $28 area. So if you're looking for a target in Snapchat, it's a potential resistance.
We got an alert.
All right, that
must
means
be
the
Jeffrey
guest is
Hirsch
here.
alert.
That was the guest alert there. You guys heard it. Let's get to it. Dennis knows how to play it, man. Let's go. Hey, Jeffrey Hirsch, editor-in-chief of the Stock Traders Almanac. And if you haven't gotten your 23 Almanac already, what are you waiting for? How we doing, Jeff?
Doing great. Great music. I love the rockin' intro.
Definitely. A little rock and roll, baby.
You got it.
All right, let's
What's
get
the word?
to
You guys buying right here? What?
Oh.
Okay, we got February dip.
Well, that's why you're
We
on
need
the show here,
Pal.
Jeff. You got to tell us what you're seeing here. And I mean, you've always got your stats. We love the Stock Traders Almanac. Looking at this. So, what do you see for the first? Let's just talk about what you're seeing right now. Let's just talk about the markets that you're seeing right now.
Well, when my partner Christopher and I were discussing things, and we did a little subscriber webinar. There was a quote that came up from our buddy John Person, pretty solid trader. Used to do the Commodity Almanac with us. It's I'd rather be a petrified bull than a penniless bear. I guess some of the downdraft in February had people concerned. I see what's Mr. Wilson coming released bullish for a short-term rally here. But, if you look at the stats and the patterns that I look at, we'll go back and review some things. But February was very typical seasonal sell-off, the weak spot. You can look at the charts. I don't know if I'm sharing anything here, but it really tracked quite closely. Some of the, Fed fears and recession fears and the big run-up we had in January took away some of the pre-election year, bullishness that February sometimes gets. But on the chart, we've got the seasonal patterns you've seen of pre-election years, all years, the year with midterm bears, our aggregate cycle, which is, seasonals and the 4-year cycle as well as the decennial cycle. This a little bit more amplitude in the sell-off we had in February, but pretty much on trend with history. And coming off of last year's midterm bear and the January bullish trifecta, we're seeing some positive numbers out of the economic stats. Market anticipates by 6 to 12, maybe, give or take months. Earnings are looking like they're going to trough in mid-year, according to like CFRA and others, So we're just, maybe not quite as gung-ho bullish with getting into all new stocks right now, but definitely on hold and definitely not expecting new lows.
And
All right,
go ahead, Mitch.
All right, so I'm going to jump in with my question is about, of course, we saw January's kind of growth stock rally. A lot of times some seasonality kind of leads towards maybe some value names in the second quarter. What do you think about that, Jeff?
On point, man. Our recommendation from the sector standpoint is the utilities, the XLU, which had a great little dip down to about 63. And it's in our ETF portfolio. And it's a very, value seasonal play, the worst 6 months. It's actually a March to October seasonal trade. This was something that's, we try to get into these a little bit earlier, or at least prepare people to pick a good buy entry level early. So this was something we put out last month to get ahead of the March to October seasonal move in utilities. So that plays right into your observation in your hand there. So, when the market, the stock market, the growth stock market isn't doing all that much, value and other things and income and dividend paying type of investments do. So that's what works in the worst 6 months.
I mean, this has been an environment where rotation has been violent at times. And I mean, we saw, oh, it's growth stocks in favor. Oh, no, it's value stocks in favor. And I mean, even looking to last year, the Dow held up fairly well, which is more of a value-oriented indice. And obviously some of the small caps, and obviously had a really bad year. The NASDAQ had a terrible year here. Do you see more of this rotation, or do we eventually go into a market where they just start buying everything?
I think we're still in rotation mode. At some point, we'll get into a buy everything. There are a few overhanging headwinds, whether it's the debt ceiling, the rate cycle, Ukraine. That's the kind of thing that can weigh out a market and create some rotation. But coming out of the pandemic and then that crazy bull and then the more normal bear market, things are still rotating. I mean, there's always rotation going on there. You mentioned the small caps, which is something I blogged on yesterday. If you been listening to what you hear everyone talking about the small cap outperformance and what have you, which I think is important and constructive for the U.S. economy, at least indicative of the strength in the U.S. economy. The smaller caps usually more U.S. based. And going back to last year, the Russell 2000, the sort of benchmark that we all look at for the small caps, was bottom first in June, held that low in October. I think we even talked about it one of the times I was on prior. So that's all healthy and everything. But there's this thing that we used to call, or still kind of call, the January effect, where small caps outperform large caps in January, documented in the Almanac. I'm sure you guys, if you want to look, page 112 and 114, where that small cap effect really happens, mid-December to mid-January. Used to go a little bit further, still kind of runs into March. And it's a great seasonal chart. I don't know if you want to grab, can you guys get to my blog?
Yeah, I can get to it, Jeff. If not, you can also share screen, just present down below if you'd like to just do it like that.
Yeah, I think this is a good chart for people to see. I made it myself.
Share screen.
Present.
You got it.
Share screen.
I have it up just in case.
You got to pick your screen.
I got to pick one, huh?
You can pick it. You can pick an actual window, or you can pick the entire screen.
So you got.
Let's see. How am I doing?
You got it, Jeff. I'm gonna put you up right now. Boom.
Technology.
Boom.
There we go.
So I guess I don't know how big that is for you guys, but
there you go.
There we go. The patterns there. So this is out of the Almanac, and this is something we looked at. This is something I used to do with Yale years ago. It used to be the S&P small cap index, and I think it's back now, but it was gone for a while. So we compared a Russell 1000 and 2000 to each other. It's just a simple ratio, Russell 2000 over 1000, and you build the 1 year seasonal pattern there. So I overlaid the same ratio with 22 to 23. This goes from July to June. We split the year differently because we're trying to highlight this mid-December to mid-January rally, and then here it goes to March. I'm not sure if the months are cut off on the bottom, but right where my arrow is in the red line is where this seasonal pattern begins to fade. As I discussed in the blog, I posted it up there on a Twitter feed as well. So small cap rotation, last year, earlier in the year, probably a little bit more. As you can see, it going against trend in October, where we held that October low that I had mentioned, kind of going against the seasonal pattern. And that's some seasonal or some non-seasonal strength that was indicative of the bull market beginning. And then we're back on trend here, where we're pretty much tracking that seasonal outperformance for the small caps that's beginning to wane right here. So maybe that current rotation is more seasonal, more historical than actual cycle rotation.
Jeff, do you have any stats? And obviously you've been doing Stock Traders Almanac for a long time. When the Fed starts going to a tightening bias, when they start to, tighten, which we've seen substantially, and interest rates have come up here substantially as well. Do you have any stats that show what the market does when the Fed is tightening as opposed to when they're loosening?
It's a huge table because it's never black and white with the Fed.
Okay.
They sometimes they go a couple steps forward, but the overall tightening cycle is not bearish like people would think. This is showing the Fed coming in and taking care of things. So, and it's not exactly perfect. It depends upon from what level you're coming from. I mean, if you're tightening from 0 versus tightening from 5%, you're talking about different impacts. The interest rates right now are still historically low and at or below average, depending upon how far back you go. So it's not something that I find to be incredibly bearish. And the only part of the headwind here is the fear that everyone's afraid that it's going to crack the economy. I am not in the recession camp. I think we had one last year. We actually put it on our chart, the old school 2 negative quarters of GDP. And we looked at some of the fundamental numbers. And, if you dig deep into the reports, like in the footnotes of the BEA, which does the PCE, the personal consumption expenditure deflator thing there, they talk about guessing. Okay, they call it estimates, but what happens when they get these numbers and they do, and what we found was that January is the biggest increase of any month of the year for the PCE index. And what they're doing is, because they don't have all the data in, they have to make some estimates, and they base it on the previous 2 quarters or the previous 2 months. So they don't have that data in there. So they're suffering from a little bit of recency bias with that uptick in inflation. And we wouldn't be surprised if the February numbers, which will come out next week, I think the 15th of March, would surprise a little bit weaker than everyone's anticipating or expecting. So, there's more to the almanac, what we do, than seasonality, cycles, and patterns. We're looking at stats, but we're also looking at fundamentals and how the data is being presented or not being presented. And technically, I mean, everyone's drawn that trend line chart. Every technician on the planet's got the same chart. I look at mine. Oh, I look like everybody else's with the big down that was now become support, and then you got the uptrend from the inverse head and shoulders bottom, all coincide. It's like a perfect storm with the 50-day and the 200-day and the pivot points and some consolidation and gaps and a whole lot of resistance times, other areas that the market spent suffering from resistance. So, I mean, there's a little bit of a battle right here.
It sure is. It sure is. We're on the line with Jeff Hirsch. He's the author of Stock Traders Almanac. Just going back to the XLU and the utilities call here. I mean, those they had a major run, but we're still in a rising interest rate environment. I mean, if you're looking for yield, there's plenty of places to go to yield. What makes you think that the utilities, or if interest rates continue to go higher, are going to be insulated from investors exiting the sector?
I wouldn't say insulated. This is a seasonal sector trade that has set up as well. Technically, I'm looking for my chart that I put out there. I think it's on our alerts.
Okay.
Let's see. But it's just not, it's not an industry play here. It's a seasonal play. As I think Mitch was saying earlier, the value stocks tend to come and play when the market goes sideways during the worst 6 months.
Yeah, it's kind of like the statistics say, at least, to look at that area. And I've also been just kind of keeping up with that, seeing if we're going to get that rotation, right? Because, I mean, the value names haven't really gotten too much. I was looking more at discretionary names and stuff like that, like PG and things like that. But it started to get a little move, but I haven't really seen anything really get the motor moving.
I was trying to show you the seasonal trend here, utilities, but it's not coming up on there. I don't know if you guys have that in your charts. There's usually a lot of the software has a little seasonal thing, but you can see this move, and it's really contrary in the beginning of the seasonal pattern from March through like May, which is where we're seeing that kind of pop we're having right here potentially. So what do you got up here on the screen? You got, where's the daily one? Which corner is that in?
For me, it's upper right. What here?
You want to put the XLU up there? I mean,
yeah, there we
before.
go. Here's the daily. I'll make it nice and big for you.
Yeah, that's good. But you see that little March dip right there? I mean, that's right in with the seasonal trend. That's what we're seeing there, in conjunction with the downtrend that happened on season, in season with the seasonal cycle. So,
I think I have a chart that might help. I think I have is this an old post from you from Stock Almanacs? This is from 2016. But if you look at the kind of the March,
we stalk you, Jeff.
All right, no, good. I went to hit the present button, but it's saying stop screen. So
that's all right. We got a good one up here.
That's all right. But that's the basic gist of it. I mean, and we look at the seasonals with respect to how they're performing. I mean, we're not just going in because it's March. We see a nice drop here leading into it, which is on the seasonal pattern. And Joel, it's competing for income with the general with the Fed funds rate and the 2-year and all those shorter term bonds that are just throwing out 5+%. So it's more of a just a place to park things while we might get some season. I spoke to you guys about the sweet spot of the 4-year cycle, right? The 3 quarters, Q4 midterm through Q2 pre-election year. We might get a little bit of pushback on that with some of the headline risk that we're talking about and the big run up that we had from October or December through the January highs. And it just may shift that out a little bit. So some of this sideways action in the market will probably benefit things like the utilities, the XLU, and that kind of thing. But I think that juice from the sweet spot will get pushed out. Maybe latter part of the year, if not into next year. I mean, election years have gotten better since 2008. We had the crisis there, and then the 2000 election year, the undecided election was kind of rough also. But we've seen some improvement in election years. So some of this, sweet spot of the 4-year cycle stuff, if we get a little headwind here or a big headwind from headlines and the Fed, then you could see that sort of pan out to the latter
anything to avoid the stock traders almanac and be a little bit cautious on here.
I'm cautious on China and overseas. I don't see the same transparency that we have here. We roll away from things seasonally. I think the stuff that's not on our list is the stuff that we're avoiding. A lot of things are still in play right now. So I think small caps have probably had a bit of a run. I'm not sure I'd want to avoid them for any length of time, but short term after the big seasonal run, I might be a little bit, cautious about getting in a whole bunch of small caps.
Jeffrey Hirsch, Stock Traders Almanac, the author, taking over from his father, Yale Hirsch, joining us here on Pre-Market Prep. Great information, Jeff. We'll talk to you again real soon.
Thanks for having me, guys. Be well.
All right. We're quiet here. I don't know, maybe some individual equities.
Before the Powell storm.
Yeah, the Powell storm. Just hanging out at mid-range on the session. That's at 40.58. We had someone made a comment about the S&Ps and Friday's close 49.75. Didn't see that in the regular in the pre-market session, but we did see that in the regular session. So be eyeballing that, and then on the upside, I wish I could give you a level before Monday's high at 82.50, but that's the only thing I have in there so far. So we'll see a lower high, and I don't see anything of 49.75, maybe 40.75, but that's what we're looking at here. Do we get to cover all our stocks here, or do we want to go to some ticker time?
We can do ticker time. We've got a few more stocks.
I have at least. Yeah, we can do ticker time. You guys go ahead, drop them in there. Drop them in there. I just wanted to kind of give a last little mention. I like to always bring you guys a little extra. So X Dividend today is Home Depot. Newmont Gold stock, and then Tex. So I just wanted to bring you some of those ex-dividend stocks that for today. So you got Home
They
Depot.
go ex-dividend tomorrow?
Yeah.
Mitch?
Yeah. And then so just keep your eye on Home Depot, NEM, Newmont, and Tex. Those were the three that I saw all around. Tex has been on a monster run.
And this is, something that I do every single day. I always look at what's going ex-dividend tomorrow because there tends to be an upward bias a day or a couple days before. And I usually a lot of times look even the week ahead because I know on like a stock like AT&T or Verizon, maybe AT&T isn't the best example anymore. Well, the dividend stocks come down so much, dividends starting to get higher there again. But there tends to be an upward bias ahead of the ex-dividend date and weakness after. And the ex-dividend date is just the date where you have to hold it into the ex-dividend date to be entitled to the dividend. When a stock goes ex-dividend, the price adjusts to reflect that new dividend. So you'll see a price adjustment actually happen. So, for example, if we grab the Home Depot, Mitch, and I don't have the Home Depot one in front of me, but maybe we can look to today's dividends like HPQ and ex-dividend here today. So HPQ's close was $28.57. The adjusted close is $28.75 because it was a partial, but basically $28.31. So again, people who are buying the stock now are not getting the dividend. People who took it home last night are getting the dividends. So, but you do see this upward bias that happens over time in stocks that tend to, have higher dividends ahead of the ex-dividend date. That is,
and it's 2.63% for Home Depot. But just wanted to mention that something a little different. Oil trying to do a little fake out towards the open like it did to us, man. The last one was tough. That was tough, Dennis. I'm not going to lie. I even got caught on that one.
Yeah.
Because the setups were nice. And that's how technicals can sometimes lead you in the wrong way, right?
You've got oil dropping pretty good here right now, actually. So.
This $80 area has been real pesky. Going back to mid-February, and you had a nice run off that Friday bashing. So now red 71 cents on the downside here. Crude, yesterday's low is down at 78.32. So that's a long ways down. That's another $1.30, $1.40 down from here. But that 80, did we close it? We did close above 80 yesterday. You got that one close, but 80 still seems to be a pesky level here.
All right, let's do
I still like the oil stocks on pullbacks.
Yeah, they're interesting for sure. And I don't think they're going away anytime soon. But here's an interesting one that I was fighting myself not to get into, but thinking about it. Airbnb. I think we all were looking at it. We talked about would it come back towards the gap zone? Yeah. It did.
Oh, perfect.
We got the opportunity there. I didn't take it. I'll definitely tell you guys I was thinking about it.
Wow.
I was just fighting myself. I was like, is this really the environment that I want Airbnb in? But hey, that 121, 120 area, it looked good. We'll see what happens.
What was the gap? It was gap on earnings? I don't remember what the gap was.
Yeah, gap on earnings.
And then you fill the gap entirely. And again, technical.
And then it starts coming back.
Old resistance becomes new support. And even looking at, I know we're over the 50% because if you went from the lows in January down at 80 up to, or we didn't get back to the 50%, 144, that would bring it back down to like 110. We didn't quite get there, but that 120 was just a good technical setup here. Hindsight Capital 2020. Wish I would have saw that one 3 days ago.
Yeah, you had a pair of highs at the 121 area. The actual high on that the day prior to earnings was 21.32, and it gave you even some pretty good room. Went to 1936, 119.36. Now, what you got to be looking at on the Airbnb on the rebound here is you've had a 25-point move to the downside, right? So if you get back to this 132, 133 area, that's going to be half of the move, and then hopefully build a base for this area and make another shot. But a rebound, run up after earnings, got a little overdone, pull back to fill the gap, and now see if we can head to this 132 area.
One that's interesting, mentioned in the chat, CrowdStrike, CRWD.
Reports tonight. There tends to be an upward bias ahead of the reports. I have been long this multiple nights just because of the run up here. What I've been doing is buying it overnight because there tends to be a bias overnight, and I take out the intraday trading, and then I sell it before they open. I've already sold it here this morning because it was already trading higher relative to the market there. So are just extracting the alpha from the bias of the stock, often trading higher ahead of the report, and that's what you've seen happen the last 4 or 5 days. CrowdStrike, along with the overall market. But CrowdStrike's done pretty well. Again, we get the earnings tonight, so I'm not planning on holding this through the report.
The gap up here it had the big gap down. So if you get a look at this one, in order to fill that gap, you need to get to 136 and a quarter. Let's say $7-8 away. The stock could definitely move that much. On the downside here, I think on this one, if they the way it had a good January, really hung in there in February. I think if they whoop this thing at hit it on the report, I think you find buyers here. You can maybe figure it 50% from wherever it tops out. But good January and good February for CrowdStrike.
All right, I did see in the chat FSLR, but I'll bring in 3 with that
Monster.
one.
Just a
I've been talking
ridiculous
about
monster.
we've been talking about on Start Swing Trading, would SEDG and ENPH play catch up to the First Solar move, and they have really started to get the motor moving, or maybe the charge moving, let's say. SEDG, I like that one. Yesterday I was looking for above 330s. I'll look for below that for pullbacks. ENPH definitely got moving also yesterday. We'll see if these can get a little bit of a push. TAN is another way that you can look at these, right?
Yeah, TAN. What about a sleepy play on a really beat up one, SunPower? And I don't mind it here. I don't have a position. I'm looking at it and thinking, well, if we're going to start buying growthy names here again, which we're starting to see happen, obviously a lot of this depends on Powell. So maybe you wait to see what happens with Powell today, because that could pull the rug out from a lot of things. If it's, but it also, if he doesn't say anything too hawkish, it could, start the rally as well. But what about a sleepy play like SunPower here? Again, not talking best of breed by any means, but we've started to see some of these stocks like Snap, and the Getter coming back yesterday, completely different stock, completely different industry, but cash, burning and not, or not a high, obviously lower PE stock, not a value stock by any means. I don't mind SunPower down here. I think there's room to 18.
Yeah, you got a stop out area here at the low of the move, right? At
14 lower the move.
14.22. All right. Well, the 9 o'clock programs came in and just took a few points off the S&Ps.
We did.
Yeah, headed back. I think you have sellers on the upside, firm sellers. Like, I might have missed the high of the move yesterday. I don't know what Powell's going to say today, and I think you got tepid buyers here because of that big move that we had on Friday. We held in yesterday, so I think resistance a little bit easier to define there. That pre-market high 64.50 is looking pretty good, and on the downside, unchanged on the session 52.50. So I'll let you guys finish it up. Everyone have a great day.
Have a good one. You guys can keep up with everything Joel does, premarketprep.com, and definitely check him out. He does do a nice in the afternoon show with stock odds. If you guys haven't caught that before, definitely would advise you to check it out. Dennis, with that one that you're looking for, SunPower, I looked into TAN, right? And I looked at the top 3. Of course, we just mentioned those top 3, but right after that, you got a couple of China names, and then there's Run. So Sunrun is one of the major ones in there. That's the next major one. So I'm keeping an eye out on this one. Really,
that's
sleepy.
In consolidation station too.
Yeah,
here. I
really
love buying them. I like buying them when they're in consolidation station. I feel like I can manage my risk a little bit better. And then you're breaking and you're going to go one direction or the other. Starts to break down. I cut it. I picked the wrong direction. Or, it starts to go. But the ones that are chasing, it's so hard to, because again, if you're coming in and buying a First Solar, for instance, which would be a total chase right now, sometimes you just get those continued moves, but you got to give it so much. I mean, First Solar, you basically got to give it back to 180 because it's still breaking out. So, I mean, how do you control your risk? Where with a Sunrun, I can say, well, we're looking like we want to break through 26. Maybe we're going to get the breakout. Maybe I wait for the breakout, although breakouts haven't been working that great. But I just feel like I just can control my risk a little bit better. But obviously, First Solar has all the momentum.
Yep. I'm going to be looking for like that kind of red to green move here. And I think First Solar will maybe get a little pullback, but that's a little bit difficult. I agree. I don't know where to get that one. The only thing I can use is maybe moving averages or the prior range, but that would be a move back towards like 186. We'll see what happens there. First Solar, EMPH did get a little bit moving there. TAN looks set up. I will say that, like, overall, just like this setup, like that does not look bad for me. And I've never traded TAN consistently, but hey, who knows? I'd
like a pullback on some of these things. It's just kind of run too far for me now because we go 5 days ago, we're 72. So we're basically up 10% in 7 trading sessions, which is obviously a lot of probably First Solar driving the bus here.
Mm-hmm.
I'd love a pullback here at the 75. And I've been saying for a while, you know, if I was buying, I do like the solar stocks. I do think eventually the solar stocks, you know, if I'm looking 5 years out, are going to be making new highs here eventually. I don't mind it here. So I guess it depends on your time frame too. I'm hoping to get it back, you know, if I was to buy this, it's the 75, 76 area there, but maybe it's going to run without me.
All right, that's going to do it for us. You guys can keep up with everything Dennis Dick does. Triple D Trader, hit him up, guys. If you're not following him, I don't know what you're doing. He does give some fun tweets every now and then, too, just to get a couple of laughs. So definitely catch it. We'll have you on, Dennis. Go do what you do. Thanks, best, guys. Man.
Thanks, Mitch.
We'll get to the trading action. All right, last question in the chat. Chris Woods asking me technical indicators. What do I like? RSI, MACD. Well, MACD, I think, is a little bit better on more of a intraday trading indicator. But on the dailies, you'll see me use often, and you'll see it at the bottom here, is there's volume, average true range on top of the volume. I'm not really looking at where this is here. This is just to give me the average true range of the stock. And we can do that on a daily basis for like FSLR. That would be about 7.7. So I can expect maybe like a 7-point move or an 8-point move in the daily range, right? Well, that just gives me a little bit of an outlook, but you always see me using RSI on a continuous basis. Why? A lot of times what I use RSI is only, I think it gives me edge on extreme moments. What do I mean by extreme? I think extreme really is more of a relative measure, not necessarily just like, oh, I'm going to say above 80s or below 20s on a stock. What I look at is the history of the stock and where does it spike? Where does it usually turn around at? For me, this is about 89 on First Solar for the oversold, overbought area, and oversold area would be down there towards like 18. So it doesn't need to be exact, but I'm only looking to really use RSI, not when it's in the middle, but when we're at the extremes to look for potential turnaround. Doesn't mean it even has to happen, right? And I think that that's an important thing. You guys can check it out. And for that case, let's take a look at like maybe like a Tesla. You see how this has been kind of turning away from the price action, the bullish price action. We'll look to see if this can turn back there towards the 90s, or can it just hang out enough to get down low enough like you saw in Tesla's reversal here, right? Look how when this was coming in through the 130s, you were at that extreme low. And then after that, you got the turn. So it's never going to be 100%, but I do like to use it. Hope you enjoyed a little bit of extra time there. Smash the thumbs up. I will see you guys over on live trading. That's coming up next. Zunaid's back. Ryan should be back. And I'm ready to get into the trading action. It's going to be fun. We'll see what happens at 10 a.m. Eastern. You guys can also catch the Jerome Powell speech right here on Benzinga. You don't got to go looking around. We'll be restreaming that for you guys. That starts at 10 a.m. Eastern. Don't miss that. That could bring some fireworks into the market. We'll see you guys, like always, on live trading. And if you guys haven't joined or want to learn a little bit more about candlestick trading, we're going to be getting into Japanese candlestick charting technique book on our book club. That's going to be starting up in just 2 weeks. So I want you guys to go ahead. You guys get a chance to get in on the book club. We went through the first book already. That was Trading in the Zone. So if you guys never checked out that book, definitely recommend it. Now, bring you guys over. Let's get to the live trading action and smash the like, team. Let's go. Like always, disclaimer, all content is for informational purposes only, not to be used as investment advice. And we'll see you over to some trading action. Let's get into it.